Okay, well, Cameron Brandt is with us, Director of Research at EPFR Global. How are flows looking? Cameron, good morning. Good to have you back on the program. So it's been a momentous week. I think absolutely right up there, right?
It certainly has been one for the books.
How are flows moving? Could you give us a sense of what's happening? Because it looks like money is leaving U.S. assets very clearly. That is the one
yes,
trend.
Well, in many ways, the greatest concern seems to be reflected in the fixed income space. Equity flows have been somewhat bipolar. The US and China actually both saw very large inflows last week, though arguably a lot of that had to do with technical factors. There has been some of the reaction you would expect. Money market funds, especially in Europe and actually emerging markets, have seen strong flows. Gold funds have done well. But it was actually bond funds that took the punishment last week, and that included US bond funds. People are still searching for a narrative that they can hang their hat on. But certainly on the equity side, there is a sense that the bond market will impose some kind of discipline on the current US administration. There continues to be faith, misplaced or not, that all of the sound and fury about tariffs is still something of a negotiating position, and when the dust settles, things won't be as far from the old normal as it might appear right now.
Yeah. Cameron, hi. So just to press a little more on this point on bonds, because that really that seems to be what shifted President Trump's mood, right? And then after announcing that 90-day pause, then he said, oh, now the bond market is beautiful. But can you give us some more details of what was this kind of outflow? Where was the money moving out as it moved out from U.S. bonds? And there's a lot of chatter around whether, we don't know for sure, but one of the theories is that maybe China or some of these large other trading partners, maybe Japan, they were dumping some U.S. treasuries, and that kind of forced the administration's hand.
That would be my guess. Put it stronger than a guess. We saw just before Trump's decision that foreign domiciled U.S. bond funds had their first sort of serious outflow in really quite some time. And I think for the administration, that was a real warning that foreign appetite for U.S. debt, which is obviously has to hold up to finance these huge deficits, might be beginning to crack. So almost simultaneously with that, we saw the 90-day pause.
Hi, Cameron. Good morning. Good to see you in. What about Indian equities? The FIs have been sellers. They slowed off a little bit. In the month of March, we saw some mild inflows as well. What is your reading in terms of flows to India?
So India was starting to move back into the picture. I mean, the pattern you just described is what we've seen in the fund flows. It's a little bit the market, the forgotten market at the moment, but that's true of almost every market in the world outside the two sides of the major trade dynamic that everyone's worrying about, which is the U.S. And China. But the narrative that brought fund flows back into India last month, certainly continues to be evident in the fund research that I read, that the Indian market is somewhat protected from this because of the relatively low exposure to global trade, that India's market has corrected to more attractive levels, that the policy environment, especially in comparison with ours, sounds very rational and mildly stimulatory. So we did see mild outflows again last week after 3 straight weeks of modest inflows. But I think when people are able to focus that India, is still not soaring the way it did for the 2 years into the fourth quarter of last year. But investors and fund managers are certainly warming back up to the Indian story.
All right, no, absolutely, and certainly hope so. Cameron, we will leave it there. Thank you very much for coming on with that quick take on how flows are moving. Markets certainly moved quite a bit, but flows is what moved them.